Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To open today's webinar, the Australian dollar outlook may soon question whether the market has hit a potential peak after last week's price action spiked to a two-year high of 81.24. Overnight, a slightly firmer US across the board has initially prevented the pair advancing any higher. Over the weekend, the Aussie was unmoved by China's better than expected CPI and PPI numbers, which were released on Saturday. The CPI number beat the 1.7 forecast and came in at 1.8%. The PPI rose by 6.3 from a 5.5 in July. Now, as I mentioned, if the Aussie bulls fail to recover in the next 24 hours and we see a break beneath this 0510 and we're now challenging this level, this would give further scope to the downside of 79.5 and reassess from there, with resistance seen now at 80.60. With the dollar slightly firming overnight, the market has now looked for a further weakness as the euro tumbles towards its uptrend at 119.10.15. A break beneath there would give further scope to the downside and bring in a target of 118.40.45 to 116.55.65. A couple of things for this bearish view to strengthen is one, if we break the uptrend. Secondly, that the shooting star that was negated on Friday has now been reintroduced from the sell-off of last night. And thirdly is the fact that the dollar index needs to break higher and needs to break over that resistance holding at 92.30.40. If that's the case, then we could be looking for the euro to challenge this next uptrend, which comes in around 116.55.65. It would seem that the dollar yen bulls have got one up against the yen weakness overnight, and the reason behind that is that with tension easing between North Korea and the United States over the last few days, there's now question from this morning's release of the UN passing new sanctions on North Korea. The United Nations Security Council has unanimously stepped up sanctions against North Korea. The resolution was imposed on Monday over the rogue nation's sixth and most powerful nuclear test on September 3rd, imposing the bans on the country's textile exports and also capping imports of crude oil. The question is, though, is how will North Korea respond to that? And prior to the information that was released by the newspaper is the fact that North Korea warned the United States that it will pay a due price if the sanctions are imposed. Well, they have. So we'll see what comes out of that. Do be a little bit cautious if you are trading long. We have seen dollar yen turn around very sharply and can do so again. So towards 110 figure 15 may be the cap for this market. And if so, we could see a pullback to 108.80. The technical implications are not overly bullish, so I'm not in full support of this current move, and we can easily see a turnaround, so do be on your guard. The pound wasn't as forthcoming overnight after recently seeing its move, purely for the fact is it was only rallying on the back of a weaker US dollar. Well, that didn't happen over last night, and you can see the pound did not continue either. If the pattern does continue in the US to firm up slightly, then we could see from the technical implications of a further breakdown beneath 131.30. This would give further scope to 130.60.65, and that is where the trigger level for the next move down towards around the 128 region. Any advances should find a cap around 132.45.55. Well, the gold has not been able to recover since it gapped down from 46 to 33 yesterday, with the current price action now looking towards this uptrend at 1,320 to 22. A break beneath there would give further scope to a target of 1,308. The market is long and has been long for quite some time, and I've not been fully supportive of this move up and sat on the sidelines for a little bit of this rally. But now, coming back to the technical point, we are looking for a further breakdown if we go beneath 20. Any advances on the day? I know it looks wide, but 36 now comes in as resistance. And with silver, it looks the same pattern. The market looks like it's going to break further to the downside, but we need to get underneath this trend line at $17.60 to get the next focus towards around the low 17 region. with the resistance now capping at 17.85. And to wrap up with crude, the market has found potential momentum. And what was reported overnight was that Saudi Arabia is saying that its oil minister recently held talks with counterparties over the possibility of extending the supply cut agreement beyond March 2018. Saudi Arabia, OPEC de facto leader and the world's largest exporter, said on Sunday that the country's energy minister met with other counterparties to discuss its extension of its OPEC supply cut agreement. Now, if we cast our memory back in May, OPEC and non-OPEC members agreed to extend production cuts by 1.8 million barrels per day for a period of 9 months until March 2018. But rising productions from the US, Nigeria and Libya has undermined the oil cartel's efforts to curb excess of supply. However, with Hurricane Irma slightly easing and also has helped the market sort of focus back to its bullish case. While we remain above 47, 40.60, I still hold the target to $50 a barrel. So that wraps up my daily video. Thank you very much for joining me, and I hope you have a wonderful day ahead that's ahead of you.